Hello, welcome back. This is chapter 2 of episode 1. In today's topic, we'll be talking about how do we trade forex. Like I already told you before, we have defined what forex market is. We said it's where two currencies are exchanged, where you buy another currency, and that's forex market. Now we are talking about how do we trade forex, because it's important to understand how we trade forex. As usual, I have a slide for you, which is this, where you can go through it at your convenience. But let me tell you about how we trade forex. Basically, forex is traded in pairs. Yes, that's the keynote. Forex is traded in pairs. That is to say, it's traded in twos. So there must be two currencies to trade against each other for there to be foreign exchange. So we have again, the second thing to note is that you need a broker to trade forex. When you have to think about trading forex in the online platform, you need a broker. Now, a broker is what? A broker is a company that offers you the provision to trade two countries' currencies. All right. There are so many brokers out there. We have Deriv, we have SNET, we have so many of them. Don't worry, in the course of this lecture, we'll talk about broker and some of the best ones you should use, you should sign up with. All right. That's if you do not have an account yet. So we're talking about how currencies are traded, rather, how we trade forex. I have established that you trade forex in two pairs and you trade them on a broker. Now, the reason you have to use broker is because it's done online. They are the intermediary between you and the currencies you want to trade. All right. So that said, if it was in an offline, the broker would have been the aboki people who give you the platform to exchange your dollars to naira. Let's assume someone sent you dollars, paper dollar, the hard currency, and you want to change it. Now you need to go to these aboki people who have enough money, enough naira to give to you and collect your dollars. All right. So in the offline setting, the aboki people are the brokers. But in the online setting, we call them brokers, and they are company. They are numerous of them. You just choose the one that suits your taste. We'll talk more about broker as we proceed in the course. Now, why are you trading? Rather, how you should trade. There are basic things to consider before trading, because you're basically trading to make profit. You are trading these two currencies to make profit. So you first of all do market analysis. We are coming to a chart representation of everything said. However, I need your key attention from this elementary stage before we dive into the main forex course. I need you to enjoy the ride. The journey is really, really going to be amazing, trust me. So I am not showing you any graph, any chart yet. I am only just going to explain things to you, and if you miss it now, I am worried you might not be able to follow up. So these elementaries need your key attention. All right. So like I said, you are basically trading forex so that you will make profit. So all that is required of forex traders is to check out the market, look at which one is fluctuating, and buy them so that you will make profit, or sell them as the case may be so that you will make profit. Now, like I said, currencies trades are taken in two pairs, like GDP, JPY, Canada dollar versus US dollar, Nigerian naira versus US dollar, like that. There are some prominent pairs. There are about 7. We'll talk about some of them in the next slide. But for the benefit of this course, I had just told you trade in two pairs and you trade to make profit. So there are basic analysis you should make to understand why you are taking this pair against this pair, why you are buying this against this, and why you're selling this against it. You should also know that when you buy a pair, then you are automatically selling the second one you matched it with. Okay, let's make it simpler. Let's talk about Nigerian naira against US dollar. Like we all know already that naira is fluctuating. It's not been stable. It's been falling, devaluing every day. All right. So what I should have done is I would just buy US dollar against Nigerian naira. Now, as US dollar continue to gain more strength over naira, naira keep falling, naira keep depreciating, naira keep losing value, and US dollar keep going higher. I will keep making profit. That is how it's done. So if I have traded US dollar against naira, I will be in massive profit. All right. In the next slide, we'll be talking about how these things are done, how these trades are taken. But I need you to understand that you need a broker here. The summary is you need a broker, and you need to make analysis on what to trade. Okay, look at what I have here. The keynotes I need you to take note of in Forex. Now, the keywords are in Forex trading. Look at them. Then you have a currency exchange rate. You have to consider the currency exchange rate, consider the profit you want to make. You have to consider the online platform you want to use. Consider the brokerage firm. The brokerage is also another name for the broker. Now, check the market condition. What is happening? Why is this currency falling? Why is it? What's happening in their economic? Then you read the news. That's when we start doing the technical analysis and the fundamental analysis. We will talk more on this. You have to check news. For Nigeria now, I want to ask you, why do you think our currency is falling? Why is naira falling? I think it's because of our economy is losing value because of bad government. So when we have bad economy, our currency will depreciate. That is that, all right? So you have to consider what is the news around US dollar. What's happening in US? Why is their currency fluctuating? Why is Canada dollar fluctuating? Why should I buy it? If I buy it, will I make profit? All right? We will teach you all of that in the course of this lecture. You consider your risk management. Your risk management involve how much risk you want to take on so pair you want to trade, how much money you want to risk in that market. That is your risk management. Check your stop loss, check your order position sizing. These will be explained way better when we go into the main chart. Understand them. That's the keynote, all right? I think that's you need to know about this course. On the next slide, we'll be talking about who trades Forex. All right? See you in the next slide.